Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your weekend update for the trading week ending March 16th. Well, it's quite a week with Apple hitting $600 a share at one time and the S&P closing over $1,400 for the first time. So what's next? What's coming this week? We'll also be looking at sector scorecard. We're looking at all the different sectors, 9 sectors, and it's showing you the biggest movers in those sectors for the week. Plus, number one pro trading tip: don't fight the market, move with the market. Now let's go to the weekly charts and MarketClub's trade triangle technology and see what's going on. So we're going to go right to our portfolio. We've got a lot of stocks to cover today, and I'll start off with the S&P 500. And you can see clearly it's a weekly chart. The S&P closed up a very positive 2.4%. Looks really, really good. Our target zone on this particular index is 1550, so it's 1550. That's 150 points from where we are right now, and the market looks really solid. A lot of people have missed this move. We did not miss the move. You can see we're long from January 10th, 1292, and we've got some nice profits in this position right now. So plus 90 on our trade triangles indicates the trend is very clearly on the upside, and we expect any pullbacks to be met with good support. The key level to look at this coming week, I should say, not this day, is going to be this area right here. Two things collide. It's going to be the 1340 area right here. You've got your parabolic here. I don't think we'll see the market come down here, but if we do and we go through this level, then it's time for intermediate term traders to exit the market and look to regroup. But generally speaking, we've got a monthly, a weekly, and a daily all up. Plus 90 indicates a very strong trend. So let's go to our next market, and that market is going to be, we're going to bypass the other markets. We're looking at either down, because they're pretty much the same, plus 90, there was still a trend. Let's look at silver. Silver's definitely on the defensive here. You can see we have a minus 70 score, an emerging trend to the downside. We just hit the midpoint of the Donchian trade channel, and clearly this is market's on the defensive. I think the market's going to be down for the next couple of weeks until the end of the month to match a very similar pattern that we've seen here, and that is we're looking for this market to sort of repeat this pattern like this. So again, this is a cycle low, cycle low. I think the cycle low is going to come in towards late March, early April. In this market, I think we could see this market certainly touch the 30, maybe even go below 30. So let's see how that plays out. But generally speaking, the market is on the defensive, and of course that's joined by the gold market, which is definitely on the defensive. We've been so right on that. We caught a lot of grief on this market, basically with saying we thought it was bearish, and people would say, no, you don't understand, the market's going much higher. Well, guess what? The market has gone a lot lower, and you can see where we are right now in gold, currently trading at 1659. Did not close well for the week. You closed down the week 3.12%. It looks to us similar pattern here with the gold as with silver, and that is we're going to see this market, I think, play out like this: cycle low, cycle low, cycle low, and a possibly energy field to push this market higher later on. But right now it's not there. Your MACD indicator is also negative. So you've got our trade triangles, daily, weekly, and monthly, all to the downside. I think it's going to be still further pressure coming in this market this coming week. So let's see how things play out, and we'll go to our next market. And the next market we're looking at is going to be copper. Copper is really kind of interesting. That's our blog, by the way. But the copper market is really pretty interesting right now because of it really is tied closely into the world economic situation. So here we are, we're plus 75 in copper. We've had a move up from these levels. The monthly still positive from 3.75. We closed in at 3.87 right now, but it looks as though we're just sort of phasing out, or staging out to go higher. We see this market going high. The trend is definitely up, and we just need to see the weekly kick in, and that will kick in probably if we go over 4 this coming week. But generally speaking, you've got the MACD and the monthly. Things are looking good for this market, and strong support at 370 in this market. Very strong support at 370. And we're looking at the May copper. So let's go to our next market. Next market we're looking at is the crude oil. Crude oil, I think, is a sleeper here. I really, really do. I'm going to take our trade triangles off because I want to show you what we think the picture is here. We've talked about this before, but it sometimes on the weekly charts it looks a lot clearer than on the daily charts. So here's the big pictures we see in crude oil, and I think last week was a very important week for this market, but we think this is generally speaking, a base. This is the head and shoulders base, or an energy field to push the market higher. So this is what we consider to be the neckline. And this is the breakout right here. So it's not unusual for the market to break out, then come back and test the neckline, which is exactly what we did. In fact, this past week, we had the rumors of a strategic release of oil from Great Britain. It was quickly squashed. It was a planted rumor for some people who were probably short this market, and the market came right back roaring, closing close to its best levels for the week. So here we are. We are looking at, based on this, what we consider to be a very large energy field. Now, this is no pun intended. It's a very large energy field. We're looking for this market to go up to about the 120 to 125 based on the measurement from this level here, the 105 level, down to about the 80 level. So it may actually go higher, but once the key levels to watch this coming week. So these are the key levels to watch in my mind. Key levels, and they are as follows: on the upside, 108 and 110. If those levels are taken out this week, we're off to the races. On the downside, you're looking at 104. So you're in this range, 104 to 108, 110. We break out of the range, we're going higher. That's just the way we see it, and I think it'll be a very positive week for oil this coming week. So let's clear the screen. Let's go to our next market. The next market we're going to be looking at, I'm going to go back to our portfolio. We've got all the sectors to go through, don't forget that. We're going to be looking at the, you can look at the USO, which is basically the same as the crude oil, but basically we're going to look at the Eurodollar. And the Eurodollar is basically in a mode that's, let's just put, yeah, here we are. Here weekly, we actually closed up a little bit for the week, not much, 0.39% against the euro. The euro was up against the dollar, I should say. But it looks like we are in a trading range, and I'll show you what that trading range is really quickly. And the trading range, as I see it right now, is the highs right here. And that's just a little bit over the 134 level. And you've got the support right here about the 130 level. So if we see this market go over those levels, I think then over the levels, 134 on the upside, and below the 130 level on the downside, this is the euro we talked against the dollar, then I think we'll see the market go down and test the support zone right here. And from there we could go obviously much lower. But right now it's still not clear. You've got a mixed picture in the MACD, which is still positive. However, all of our trade triangles, I believe, if I get this, I'll clear the screen off in here and show you, all our trade triangles basically are still longer term negative on this market. So it would favor being short the euro, long dollars. The dollar is king once again. So let's go back to our next market. We're going to be looking at the Reuters Jeffries CRB Index. This is an important indicator for inflation. And I'm going to go, let's just look at 1 year. You get an idea. We've sort of been flattening out here. Key levels to look at again on this market, in my opinion, are as follows. The strong double bottom, meaning prices aren't going to go much lower than we've seen right now. We've got the pivot point right here, and this is one of our favorite formations. When you get the sort of double bottom pivot point, the market moves over. It just barely moved over here, and so it came back a little bit resting, but we've been going sideways. To me, the key level here on the downside is 310, and on the upside is 325. If we go over the 325 level, and I think we will because of crude oil, we're off to the races. This market's going to go much higher, indicating inflation is coming back regardless of what the U.S. government has to say. But you're also positive on the MACD. These are the MACD indicators. This is developed by a friend of mine called Gerald Appel, and it looks like it wants to go higher too there. So let's clear the screen off, go to our next market. And the next market we're going to be looking at is going to be, let me get my indicator on, and we'll go right back there. We're going to be looking at Brunswick. This is the first of the sectors we're looking at, and this sector is the consumer goods sector. And as you can see, we've been long from This level here on the 23rd of January, 21.15. Market's currently trading at 26.30. Nice trade. Plus 90, strong trend. Like the way this market's moving. This market was up last week 9.76%. And again, this is all based on our trade triangle technology. Nothing else, just going with the trends. And that's the key thing to remember. Don't fight the market, go with the market. Next market we're looking at is going to be the services sector. And this is looking at the stock is Royal Caribbean Cruises. Remember those guys? The guys that sank the boat off the Italian coast? And well, they've recovered. They never really got too badly hit, but it's come back. The market was up. Actually, last week it was up 11.68%, so it's actually put in a very, very good performance. And we're long this market longer term from 29.66, about $1 lower. But generally speaking, the key level here to watch, in my opinion, is going to be the 32 level. If we close over 32 in this market, then I think we've got another push up to see maybe going to the 38 to $40 level. So let's see how that plays out. But the trend is sort of emerging to the upside, plus 65 trading range. But watch this market very carefully, because most of the bad news is out for this market right now. So going to our next market. Next market is Zoll Medical. Of course, this is going to be the healthcare sector. This market was up last week, 4.96%. Again, we've been long this market from 46.02. Excuse me, I gave you the wrong information. This market closed up here last week. It was up 23.54%. So from where you are here, from 46 to 92, I think you'd agree this has been long from December 1st. I think you'd agree in 3 months that's a pretty good return. So let's see, although our trade triangles are positive, I think this market's probably going to keep that trend. May see some pullback next week, but generally speaking, the trend is your friend, and don't fight the markets. That's the key thing. Looking at CRR, Carbo Ceramics. Carbo Ceramics falls into the energy sector, which is interesting. You can see that has a negative long-term approach. Now it is up on the week. It closed up 9.07%. Nice close. It certainly made the turn on the PSAR. It hasn't made the turn yet on the MACD, and it hasn't made the turn yet on the trade triangle. So that's one to watch for sure. So let's go to our next market. The next market we're going to be looking at is Autodesk. Autodesk falls into the technology sector, and Autodesk had a good week last week, closing up 11.17%. We are long, of course, from the 36.35 level. Got about $5 profit in that. You can see our other positions that we had signals on. Generally speaking, the trend is your friend, and the trend in Autodesk is on the upside, as it is in technology. So let's go to our next market. Next market we're looking at is Bank of America. This may surprise a lot of people. This is the financial sector. Bank of America put in an amazing performance, up 21.76% last week alone. So here we are. We have our monthly trade triangle from 7.43. That's on January 26th. And here we are, substantially higher in this stock. You've got about a 25%, actually more than that, about a 30% return in just a few weeks using trade triangles. And you can see the trade triangles are short, are out of the market from 13.16 on the April 14th, and that's 2011. So it's a long time ago. We stayed negative on this market until it made the turn. That's the key thing with trade triangles. You let the market make the turn for you. Don't try to anticipate it. Don't try to buy the bottom. No one does successfully. You can get close to the bottom. In fact, if I put out weekly trade triangles, you can see, boom, pretty close to the bottom there. At 563, we were short there from 603, so we made about 50-cent profit. And then we are out of the market for this move, and then we eventually got long when our monthly trade triangle kicked in. So let's go to our next market. Next market is USG. USG is on the industrial goods. This market put a good performance in. We had a weekly buy on this. But also our monthly has been in there for quite some time from this area here, 10.53, market's at 17. It's a 70% return. It looks really, really nice. Looks like it wants to go higher. So again, the trade triangles can do all this work for you. You don't have to listen to anybody. You don't have to listen to me. Just look at the trade triangles and go with the flow. So next market is the material sector, and we're looking at So Lazy Me. I hope I'm pronouncing that correctly, but the monthly kicked in February 23rd at 1347, market's at 1557. Market looks good to us on the upside. Next market, last market, is going to be the Atlas Energy. This is in the utility sector. And look at how Atlas acted. Huge move on the upside, 17.76 for the week. And you can see we're long in this market from December 2nd, from 26. The market's trading at 32, another good return. So again, remember, don't fight the market. Go with the flow of the market and use the trade triangles. Let me just write the rules down for you. It's very, very simple. Let me move this over here like this. And let me get my pen on here. So this is how we do it. And you use this. This is the monthly. So it's the monthly for trend, okay? So you use those indicators. So a green is up and a red is down. Pretty simple. Out, you're either out or short the market, or you're long the market here. We use the weeklies right here, the weekly trade triangles, for timing. Now there's two options here. If you're an intermediate term trader, this is what you want to use. If you're a long-term trader, just use the monthlies. So long-term, just use the monthlies, okay? If you're intermediate term, use the weekly for timing and the monthly for the trend. That's all there is to it. So this is Adam Hewison for Market Club with your weekend wrap up for March 16th. Have a great weekend, everybody. I'll see you Monday.